quick audio and visual check. Moderator, if you can tell me you can hear me and you can see the screen, quickly type in a yes, please, just to make sure I'm not just talking without it working. Okay. Okay. All right, perfect. So it sounds like we're good to go. Yeah, let's continue. So what we're going to talk about today is a continuation of what we've discussed on Wednesday, and that is our daily process for market research and the real-time analysis. So like I said last week, excuse me, like I said on rather, we are going to now for the next 2 sessions still focus much more on the real-time to just theory. Okay, now we've done plenty of both already in the webinar series, but we only have 2 webinars left in the series, so today and then next Wednesday. So I feel like we should do as much as possible of practical analysis here at this point. So let me just quickly remind you what we did in terms of the daily process. We want to just kind of talk a little bit about what the processes we're looking at. So if you guys remember last time, I added a whole bunch of sectors here, and I'm actually going to do the same thing again right now, and I'm going to do it in real time. So let me just delete some of these things here. I can't seem to recall how to do that. Anyway, I'll just add some tickers here first. Okay, so let's add a couple here, and we're just going to go ahead and start adding the S&P 500 sectors one more time, at least some of them, because that really ends up being sort of our basis for being able to look at the market like we talked about on Wednesday. It really is a great way to just kind of get an overview of what's happening from a risk on, risk off perspective, and what different parts of the market are doing as well. We're talking about anything from commodities to even interest rates, and I think that's really, really important to understand. So let me just build this a little bit more, add a couple more ETFs here or sectors of the market. So we've got 1, 2, 3, 4, 5. Let's add a couple more. Let's add the XLP, XLU, utilities. And again, it's really important that you guys understand, what each of these stands for. And I think we got a 1, 2, 3, 4, 5, 6, 7. I know there's one more, and I'm forgetting it right now. I guess we could add the IYT, transportation stocks. Let's put this lower. Okay, XLI, XLK, XLP. Oh, XLV. Gotcha. Okay. All right, and the XLV stands for the healthcare part of the market. Okay. So let's kind of go through this. So let's start with the S&P 500. That's our benchmark base case sort of index. And as you can see, since we discussed the market on Wednesday, we have essentially further risen, and that in and of itself is it's sort of a testimony to the strength of this market. Of course, no market will rise forever. Ultimately, you do start seeing some sort of mean reversion, but for the time being, we are pushing higher, and we do want to respect that. So I'm going to just quickly have a look at the market here live with you guys. The U.S. market at this point has been open for well, about 2 hours. Okay, so it's a Fridays, and let me maybe quickly mention that on a Friday, and this is also very valuable information. On Fridays, personally, I tend not to do much, if any, trading. I think Fridays are good to close some trades, maybe take some profits, maybe stop yourself out of a trade if it doesn't feel right. Because you do have to keep in mind that, you know, on Friday we are looking at 2 days ahead now, so Saturday and Sunday, of course, when the stock market is closed, and it's usually best to reduce a little bit, not take on too much risk into a weekend. It's 2 days of not being able to react to something if something happens, good or bad, right? And so that's important. Now, let me also say something here, in case anyone, you know, trades or wants to trade options at some point going forward. The options market also is important to understand when it comes to the stock market. And the very simple point I want to make here, just right now, real quick, is that the options market, you know, if you are long options, you're essentially at risk of losing money from theta, which is time decay. And time decay over the weekend, of course, is going to increase, and really have 2 days of premium being able to come out. So, like, for example, today I'm actually long some puts. I own some puts in the S&P 500, and actually just before reduced this position a little bit because over the weekend that's going to be you know, have 2 days of theta, of time premium, basically coming out of that, if that makes sense. So just wanted to quickly mention that it's options is not the topic here in this webinar series, at least not yet. But I want to quickly just mention that. So all in all, I think the most important thing to understand here is that ahead of a weekend, especially ahead of a long weekend, which in this case we have a normal weekend coming up, the U.S. stock market opens again on Monday. It's usually best not to do a whole lot of trading. Also important to understand is that particularly Friday afternoons, New York time, so that's starts in about 20 minutes from now. So in about 20 minutes, it's midday, so noon in New York. And the afternoon session on Fridays tends to be very choppy and lower in volume, and that's because people are already going into the weekend. Europe is closed. And so things tend to be rather quiet from a volume perspective, and again, a lot of people, just like what I just mentioned, don't really want to add a lot of risk positions into a weekend. Okay, so that's just a little bit of risk management there, and I think it's extremely important. Yeah, exactly. So options expire on Fridays, specifically equity options. Expire, the monthly options, which are what I call the regular options. They expire every third Friday. Well, technically they actually expire on Saturday, but the last trading day for the options are on Fridays. So they expire every third Friday of the month. And then we have weekly options as well, which personally I'm not a big fan of, but they too do expire. In fact, the weekly options expire pretty much, yeah, every Friday. There's some options expiring on that. So anyway, and that also brings up, I guess, one last point while we're on it, and that's that of options expiration Friday. So particularly on the weeks when we have the monthly options expire every Friday, and particularly when we have something called triple and quadruple witching options expiration, which is basically what happens when you have options expire both on stocks, on indices, and then options on futures and all sorts of stuff like that. Those tend to be really, really, really bad days to trade, or at least to open new positions, because it's just a very noisy market at that point. So just wanted to quickly highlight that as well. All right. So let's kind of look at this market today. And like I said before, the S&P, if we look at it a little bit more closely, and by the way, this is the weekly chart. I need to bring in the daily chart. Okay. Just quickly so you can see what happened yesterday. So I'm going to actually make this a 5-minute chart. so you guys can see what happened. Yesterday. So this here is today. This is yesterday. Okay. So yesterday the S&P 500 opened here and it quickly dropped lower. But then around 11 o'clock in the morning in New York time, which you can see here as about roughly 1800 hours, right? I guess that's probably. I guess that must be like Moscow time or something. Anytime. Anyway, the point is that we had a quick sell-off, and we basically closed. We had an open gap, and then we basically pushed higher for the rest of the day. Okay, and so there's two things I want to quickly show you here. Number one is the strong bullish reversal that we had take place. We've talked about this a few webinars ago, and we talked about this notion of having, and I'm going to see if I can't finish right. It's this candle here. So see that blue arrow? It's pointing towards, well, I guess towards the red, the green, the green yellow, the green big candle up. That's what we call a bullish reversal candle. This is the 5-minute chart of the S&P 500, and you can see that strong bullish reversal that finally ultimately had a follow-through buying candle here, and then we continued to rally. We had several of these attempts take place before, right? Particularly here, but we never had any follow-through buying like this one here. So that's ultimately what led to a nice rally. And this morning we had the opposite. We had a down gap, and then we quickly reversed back higher. And I actually think we've seen a bearish reversal here. We had one here, follow through selling, but it didn't lead anywhere because we came into support and that held. But so far here, this looks like a better bearish reversal. So let's watch the S&P 500 a little bit here over the next 35 minutes or so and see what it does. And I'm going to quickly check here on my phone if these are real time. I think this might be 20 minutes delayed, like we said on Wednesday, minus 25 basis points. So 235. No, this is real time right now. Yeah, that looks to be real time. So anyway, you can see that we are basically, if we want to apply some basic technical analysis, you can see that we are essentially attempting to break lower out of this rising wedge, if you will. We are also falling below that black line. You can see the black line there. What that is the 21 or the 20 period moving average. And we talked about the 20 period moving average last on Wednesday, and I believe the 20 period moving average is a really good one to use for like near term stuff. Things like being able to determine, you know, just like what the real near term is. And you can see right now it's choppy. We're also coming into, by the way, this is another tip for you from an execution perspective. We're now coming into, like we said, the noon hour, so midday, like lunchtime. In about 15 or in 10 minutes or so, it's going to be lunchtime in New York. And again, two things. Number one is the fact that we have people now leaving into the weekend already. And number two, it is lunchtime, right? So lunchtime usually is not a great time to execute trades because it gets a little bit choppier. On average, right? Of course, there are exceptions to that, but basically the noon period is not a great time to trade. So I guess I just wanted to make that clear. Okay. So having said all that, let's continue and dig a little bit deeper into this market. I think an important part to always look at first and foremost is the relationship, like we talked about it last on Wednesday, between the S&P 500, that's the SPY, versus the Russell 2000. And let's look at the daily chart. Keep in mind where it is right now, where the S&P is at 235.90. Okay, so let's see what happens here. I actually think the path of least resistance might be lower here. Let's see if that ends to be the case here over the next half an hour or so. Okay, so let's have a look at the just quickly look at the scoreboard here, if you will, or the watch list. And you can see the Russell 2000, again, that's the IWM small cap index, very important to always watch, is now down 0.17%, so we call that 17 basis points. And the S&P 500 is down 22 basis points. So today, we're actually seeing a bit of an inverse or a reverse of what we've seen week to date, which has been, we've mostly so far this week seen the small caps underperform the S&P 500. And today, at least so far, it's kind of the reverse. We're seeing the S&P underperform the Russell 2000. And to some extent, honestly, this kind of also just speaks to the fact that we have a boring market. We're down 22 basis points and 17 basis points respectively. It's very flat, right? There's not a whole lot going on. You can see that here let me just get rid of that. Okay, oops. Okay, and this as well. Okay, so you can see we had an attempt at a sell-off yesterday, which failed. Today we had a sell-off as well, an attempt, and it hasn't yet quite followed anywhere. But nonetheless, we're kind of just stuck. So we're waiting for news. We're waiting to see some sort of some sort of reaction by the market to something that's coming out of the administration. So that brings me to a very important point. So, and this is something I discussed in great detail, or have been discussing in great detail with a lot of subscribers of mine, but also institutional investors I speak with, and that is to be able to understand when the market changes its focus. So if you look at the S&P 500 through, let's make this a weekly chart, okay, and this, you'll see how this fits into, here, week, and you can see how this fits into the broader analysis. So S&P 500, and really for the most part, from about down here in 2009 all the way back to, well, pretty much last November, which is about here, the focus of the markets, at least of the U.S. markets, for a large part were on what's the Fed going to do, the Federal Reserve, the central bank, and to some extent also the European Central Bank and the Japanese central bank, and maybe even China. Okay, that's kind of been the focus, and maybe even UK, and so on and so forth. And so that focus has quite clearly shifted once we came out of the election, because now the focus is much more on what the president or the U.S. president going to do, and what or what can he do and what can't he do of the things that he wants to do. So the focus has dramatically shifted. The Fed remains important, but we're now much more concerned about what the market's going to do in terms of what is it reacting to. And this is really important to understand, because if the market starts shifting its focus from one source of information to the next one, we need to be able to recognize that and respect that. Okay, because if we don't, we can very quickly start falling behind the curve if we're focusing on the wrong parts that the market's focusing on. All right, so there's not a lot of technical stuff here to talk about from that, but basically, I guess what I want to tell you is that the S&P 500 at this point is just getting extremely stretched to the upside. We can add something very simple like a relative strength index, okay, and that's the RSI. And the last time the relative strength index, or at least the one that I had used, was this high, it was about 2010. Okay, and for some reason this one seems to be a little bit off. No, it's probably the same thing. You just probably can't see it as well. But the RSI, at least the one I use, is right now at levels last seen in about 2010, and that's quite lofty. It doesn't mean that the stock market has to fall apart, but it does mean that the momentum on the upside is probably now quite exhausted. And like we said on Wednesday, it doesn't mean that you have to go and short stocks, but it does mean that you may want to be a little bit more cautious in terms of let me quickly see here, in terms of buying stuff or buying stocks here going forward. Okay, so that's really kind of the main point I want to make. Now let's look at a couple other parts of the market. One of the things that yesterday was a little bit concerning were the transportation stocks, and if we look at the IYT here, which you can see is up 17 basis points today, so also not doing a whole lot, but nonetheless something worth watching. The transportation stocks have attempted to give us some weakness yesterday, and for some reason this is the weekly chart. Here we go. Let's go to the daily chart. Okay, so some people are starting to be a little concerned about the transportation stocks, which are really, if you look at them, they're basically stuck in this range, right? So they haven't really gone anywhere up or down. But what we see is that we've had a bit of a scare yesterday. We had a bit of a sell-off, a relative weakness. But again, broadly speaking, we're continuing to hold the 50-period moving average. Again, that's that yellow line, and we're still stuck in that range. So if you were to ask me, there's very little reason here to be doing a whole lot of trading. I think this is a market that needs to now figure out where it wants to go. There's been a lot of stuff to do, a lot of trades to do. For example, I'll show you a couple that we did over the past week or two. Intel, for example, we traded Intel on the long side because of that strong bullish reversal that it had down here. Okay, here you can see we came into the 200-day moving average. We had a seller exhaustion, follow through buying. Okay, and I actually have an indicator on this, guys, just so you know. If anyone's interested, you can always ask me on that, which is programmed for a few platforms. We call it the B2 reversal indicator, and that usually works very, very well once you have price confirmation. So in case of a bullish setup, what you need is what we call follow through buying. In case of a bearish setup, you need follow through selling. So in this case, you can see that we had follow through buying and then the stock rose. We're also looking at things like Monsanto. This is a material stock that do like agricultural chemicals, of course. A stock that I think will continue to act well over time. I think it may be getting a little bit overbought, but this is another stock that's coming into important resistance here, and so on and so forth. We can kind of go through the list. CIT Group is a stock that I mentioned to you guys on Wednesday. We talked about the stock looking like it could break out. I don't know if you remember that. It never did. Right, and then we said that I don't want to buy the stock unless it goes back above $44. Well, you can see it hasn't done that, and it's now basically mean reverting back to the downside along with other banking stocks. So let's have a look at another banking stock. That's a good tell them. That's Bank of America, and you can see they're kind of moving in tandem, which brings me to another point. And that point is about correlation once again. And then, by the way, we'll talk about this real quick, and then I want to look at Tesla. There's a trade. There's a way to look at Tesla right now. I think there's a new trade here to do, so I'll show you guys that in just a minute, as well as in NVIDIA, ticker symbol NVDA. So let's just quickly take a step back from the charts for just a couple minutes and discuss this whole notion about correlation. Now, we've talked about it several times, but the stock market is very highly correlated. Okay, so stocks, unlike commodities, tend to move up and down together. So at any given point, you will have 8 out of 10 stocks move up or down together, and that correlation is even higher if you look at it within the respective sectors and industry groups. Okay, so that's important to note. So if you guys are ready, I think we should look. Actually, we'll look at Tesla. Let me make one more point. But again, this point on correlation is not to be underestimated, because what happens is, like right now, if you look at the broad stock market right now, we talked about the S&P 500 before, and again, the S&P 500 is not the entire stock market, but it is very overbought right now. So if the broad stock market were to correct, you know, a few percent, let's say, then you could be very certain that most of the stocks will also go down. Like 8 out of 10 stocks will likely also go down. So, you know, that's kind of an important point here. So let's talk about Tesla. Ticker symbol TSLA, Theodore Sam LA. And let's see. I have to quickly tap that in one more time. Okay, Tesla Motors. Of course, this is an electric car maker, and we've talked about it last on Wednesday, but I want to go through it one more time, and this will be a good analysis, you know, for anyone to do also, like, you know, forever. This, of course, we're analyzing a stock here right now in real time, but here's what I'm seeing. Okay, so let me just kind of walk you through this. So the company reported earnings on, I guess, Wednesday. The stock reacted to those earnings yesterday, and now, you know, we might have something might have a new trade. Okay, so what we see here is Tesla basically stuck in this trading range. This is the long-term chart, right? So we're looking at Tesla here now through a multi-year lens, looking at basically these are the weekly bars you can see here, right? So what we're looking at is a stock that's basically stuck in a range. Yes, we could say that the stock here broke below this range, and of course it did, right? I would be lying to you if we didn't admit that. But nonetheless, you can see that the stock is range bound for the most part. And by the way, the stock here did bounce into its 200-week moving average. This was 1 year ago. I believe this was 1 year ago, February 2016, I believe. Anyway, the point is the stock had rallied very strongly now back to the upper end of this trading range, right into earnings. And two very important points. So number one is to understand that the fact that the stock rallied so strongly, okay, that last leg you can see here, so this move here, the fact that it moved from the lower end of the range to the upper end of the range into its earnings report, basically makes it very, very, very difficult for the stock to continue higher at this rate on a sustainable basis and start pushing above resistance. I would, you know, I don't want to say impossible because everything's somewhat possible, but very, very difficult to remain up there on a sustainable basis. So the fact that the stock has now basically reversed yesterday's stock dropped after earnings because of concerns of another capital raise and so on and so forth. And so the stock is now basically consolidating, and we now have to figure out where it might go next. So let's first figure it out on the weekly chart. So number one, on the weekly chart, you can see, again, we bumped right into resistance up here, and we're now basically consolidating. You can also look at this through the lens of candlestick analysis, and if you guys might recall, if we want to look at this through the lens of candlestick analysis, we had buyer exhaustion take place up here. So you can see this is last week. Again, these are weekly charts, okay? So what we had take place here is the stock basically exhausted itself, and the buyers could no longer keep the stock at its highs. Well, so far this week we had one more rally attempt, and I'll show you that on the daily chart in just 1 minute. But really, we've got a very big bearish reversal take place on the weekly chart. So we've got an exhaustion buying last week, and this week an engulfing candle. So now if we go in and we look at this on the daily chart, you can see several things taking place. Okay, well, number one, you can see we have broken now as a result of yesterday's price action following the earnings report. We have broken below the rising channel that we've had, Okay, that's basically this, right? That's number one. We've also broken below the black line. That black line is the 21-day moving average. You can see that has been holding as support all the way since December, and we gapped right below there. So if you note this part of them here, we had an up gap take place here. You note that, and we also had now we have a down gap take place here. See those little air pockets, those air pockets where I just drew these arrows in? So that basically what that does, it isolates. Okay, it isolates this price action up here, right, as sort of an island, which is why we call this up gap followed by this down gap an island reversal. Okay, so taking all this together, okay, number one, on the weekly chart from before, we had exhaustion buying last week, followed by basically follow through selling this week with a bearish engulfing reversal. And then on the daily chart here, you can also see the buying exhaustion from last week, right? Then a bearish engulfing reversal here. Right before earnings yesterday, we gapped lower. We gapped below the 21-day moving average. We gapped below this uptrend, and we put in this island reversal. So the odds here that Tesla is going to at least, stay somewhere around here. Let me draw. At least stay somewhere around here for a bit, maybe even go down to 230, sort of this kind of move, I think is very, very reasonable. Maybe the stock needs to mean revert back to its 50-day moving average. That's the yellow line. Maybe it even has to go back down to the 200-day, which is in blue, and the 100-day, the 200-day, which is in red, and the 100-day, which is in blue, right? So that's kind of what I look at. So now there's a couple of things we can do here. Well, number one could of course just sell short the stock, right? To me, that's something. So let me say this: any trade here probably has to be done in somewhat, small-ish size, because number one, it is a volatile stock, like you guys are saying, and number two, also because the stock could, at any given point, because it is a growth stock, it is a stock that a lot of people like, and I actually do believe in the story, it could quickly start reversing higher. And so any bullish reversal here would be your stop loss signal. So if this stock manages to give us a very good rally day and get back above, let's say, this area here, which is about $265 or so on a daily closing basis, that would certainly, in my mind, quickly bring the stock back on more of a bullish stance and a bearish stance. But bearing that, I do think that the stock at this point is path of least resistance is closer, sort of, towards 230. Well, let's say 240 first, and then maybe 230. So that's kind of the analysis here at Tesla, and there's a lot to be said about doing a trade like this, because at the end of the day, if we zoom out again, you can see that this area that I just marked here, this blue area, pretty much coincides with the middle part of this big picture range. So now that the stock has moved back to the upper end of the range, logically, if this sort of ping pong match were to continue, right, it would have to come back down somewhat, at least towards the middle of this range, if not towards the bottom, and unless and until it actually starts to break out. Okay, so that's what I want to look at here at Tesla. Now let's look at a couple other ideas. Sure. Well, first of all, let me show you guys Apple. I wanted to go through Apple one more time, because Apple too, is at a very, very important spot. And in fact, if we look at Apple today, there was a little bit of selling pressure this morning, but it's really not enough to write home about. So let's look at Apple here, and I'm going to make it a weekly chart. And again, what I would like for you to learn here is very much the same that we just looked at in Tesla, which is this very sharp rise here, this move here, right? This sharp rise into its previous all-time highs, where my cursor is in 2015. That sharp rise is is very, very difficult to continue at this rate. In other words, a sustainable breakout to new highs at this point without at least some sort of sideways movement, maybe lower, okay, is very, very difficult to imagine. So, you know, there's a very basic principle here to learn, and that is that you know, stocks that rally too strongly, or if they sell off too strongly, but mostly when they rally too strongly, it's best to exercise patience and wait for them to consolidate before ultimately possibly pushing higher. So that's to me probably the most important thing to understand, both for Tesla right now as well as for a stock like Apple. Okay, so we'll do another 10 minutes or so here today. Let's go through a couple ideas. Yeah, well, sure, I'm happy to look at Momo again. We seem to look at that one quite often. You know, like I said on well, actually, I don't know if we've talked about this one. Well, let me say one thing. The issue with Momo, I believe, is volume. If I remember correctly, this stock has very, very little volume, so it's probably not something I would ever touch. But if you want my opinion, again, this is not advice. This is simply just, you know, what I'm looking at. I would say the stock here does have a fair chance of possibly being able to push higher. Again, I know nothing about the stock, so you know, you have to understand this is just a basic rudimentary analysis, but I know that's kind of what I'm looking at here, and I do think there might be enough momentum to sustain the stock back towards, you know, $25.90 or $26 or so. So that's a very basic one. And then of course OCN, we certainly have looked at that one before. Aquin, you know, my problem with a stock like this is just the very simple fact that it has very little. Excuse me. It's too low a price. Okay, so this is the daily chart, by the way, before we looked at like a minute chart. So excuse me for that. We'll actually get back to that stock. But OCN here is kind of just, you know, I think last time we looked at this stock, we said, listen, I think this stock needs to be able to get past resistance, and it didn't, right? So we said that if it has to get above $6 or so in order to become important, to become interesting, and it hasn't done it, right? So now the stock is basically kind of falling apart, right? So what do? Well, it's probably not something I would really short at this point. It's such a low price stock. I don't believe in personally, I don't believe in shorting stocks that low, because this is a good lesson here as well, actually. So let's go through this quickly. So yes, you can always make a bear case, but there are better shorting opportunities out there than this stock. I promise me. Number one, the stock is only $4. Now, of course, it can go to $0, it can go to $4, it can go to $3, whatever. The problem with a stock like this, because if it's low price, it can be sort of, for the lack of a better term, manipulated very easily. Okay, so which also means that if, let's say, all it takes is like one rumor Monday morning, and if you short this stock, it's going to open up back here, around like $6 maybe, and then you really, really are screwed. Now, of course, the same thing can happen on the downside, right? As we saw here, for example, yesterday the stock dropped very badly, right? But you are more prone to the upside shocks because of this, what we call short squeezes, or yeah, that's pretty much that, right? So to me, at this point, I wouldn't touch it. I see no reason to touch it. I think a breakout above $6 would have been nice, but it didn't happen. And again, this goes to the point of exercising patience. Remember, something we talk about. We talk about a lot is this point of exercising patience. I don't know, ABC Trader, did you ever take this trade in Aquin, or what's your current positioning on this? I know we've talked about it several times in the past, but yeah, so it just goes to the point of being patient, and that's what I teach my students and my members every single day. It's about being patient. If you can be patient, then over time the odds are dramatically in your favor of making money. But if you can't be patient, then the problem is that you're going to take trades prematurely. Like for example, this trade here, there was no reason to buy the stock until we had price confirmation of the stock actually going past technical resistance. And so yeah, okay, so you bought it. So you bought it before. So he's saying that he bought it somewhere near 490 and exited about 590. So that's fine. So you must have bought it. Well, I guess I don't know what time period you bought it. But anyway, so that's nice. So you had a nice trade there. But again, the point is to be patient on these sort of breakout attempts. Because again, unless we have a breakout, we don't have a breakout. And by the way, this brings me to two more stocks: Facebook and Amazon.com. Okay, so Facebook today is kind of just meandering sideways, but this is a stock that I mentioned to my members, to my Clubhouse members, coming into Tuesday morning, because Monday was the U.S. stock market was closed, and I said, listen, it looks to me like the stock could start breaking out, and of course, it actually did end up doing so early this week. I guess on Tuesday, Wednesday, Friday, yeah, whatever. Anyway, early this week. But now the stock is kind of consolidating, so it's still holding above resistance, and that's okay. Excuse me, above support, but it hasn't really followed through to the upside. Same thing for Amazon.com. Oops. Oopsie. Amazon.com. Actually, this stock, we'll have a look at it today. So this stock has now given us a breakout fake out. Okay, so you can see we had a breakout on Tuesday, Wednesday, on Tuesday, and today we're breaking back below support. So this is a very good case. Where if someone would have bought Amazon.com on Tuesday because of Tuesday because of that breakout where the cursor hand is right now. Today, from a swing trading perspective, okay, I'm talking about swing trading. From a long-term perspective, that's a different analysis. But from a swing trading perspective, one would have to get out of this trade today, right? Just to be for the sake of risk management and to respect the price action. So this is a something important to note. Now again, it's only 12:15 here on the East Coast, but nonetheless, this is something to respect. So that's a breakout fake out taking place in Amazon. Facebook is still kind of holding in there. We went through Tesla. Let's have a look at the S&P 500 and see what, if anything, has happened since we talked about it earlier. This one looks like we've now rallied. Let's go and look at the 5-minute chart. Okay, good. So it sounds like the market is still holding up. I'm trying to delete this. Okay, so this is just a 5-minute chart, right? So what you can see here is, okay, so what you can see here is when we look at the market here about half an hour ago, we noted that it broke below the 21-day moving average. We noted that it had, let me get this. Anyway, we noted that it broke below this trend line. I don't know why this is working here. Whatever, it doesn't matter. The point is, it's now reversed back up, and so looks like it might start pushing higher. So we still have an unfilled gap, by the way. There's we talked about gap trading, if you guys might recall. This is sort of the unfilled gap that we, okay, this doesn't want to draw either. But anyway, the point is, we closed yesterday around here for the day, and we opened down here. So there's still this bit in here, this white space here, that we could fill. But you can see we had a strong bullish reversal here a few minutes ago. Well, about 20 minutes ago or so, and that's now pushed us back up. So the bearish attempts here didn't work out. And again, but this is a really good example of why trading on Friday is really not very smart, okay? Particularly trading Friday afternoon, and maybe even worse, trading Friday at like around lunchtime, which is like right now, right? So remember I said before, it gets very, very choppy on Friday afternoon and around lunchtime. And that's exactly what we are seeing here right now. So there's no way I would ever do a trade right now, certainly not day trade. But that's something worth noting. Now, one more thing I wanted to look at, guys, is gold. Okay, so let's have a look at the GLD ETF, and let's look at it through the lens of the daily chart. Okay, now gold has actually been, to me, surprising how strong it has rallied this year. So I didn't participate in any of this move, but I do want to look at gold here and see if there's something we might be able to figure out. I will tell you that I think gold and oil are some of the most difficult things to trade. I think it's unbelievably difficult to make money trying to do directional bets in oil and gold. To be honest with you, I'm not entirely sure why that is, and I almost don't care. I'm just telling you those are very, very difficult things to trade and to make money in with directional bets. So I think there's much easier trades. Nonetheless, here's the weekly chart in gold, and what you can see and what we have seen is that we've had an important low here, and maybe, it's not yet confirmed, but maybe we have just made an important higher low here. Now, the other way to look at it is just drawing some basic trend lines, and what I see is this. Okay, so we are possibly looking to break past that. Now, again, I don't have a trade, and I don't trust gold here at this point, but I'm just kind of giving you a little bit of sort of reference points. You can see the diagonal I just drew here more or less comes in right where we are right now. Also, note the red line. That red line is the 200-day moving average. You can see it acted as resistance nicely, right? Then it became support, right? And now maybe it's going to become resistance. We'll have to see. So we're coming into an important point here for gold, which is both made up of the red line, that 200-period moving average, as well as the diagonal line that you can see there from the top left to the lower, to the slanting down to the right. So this one right here. Okay. So to me, gold is something to watch here. I have alerts set. If we see a breakout, then I'm not going to chase it at this point. That's nice to see. But if we see a bearish reversal here, strong enough one, maybe gold becomes something interesting on the short side. Then one more stock that I want to go through, and we'll make this the last one, is Lululemon. This is a stock that you may or may not be familiar with. These guys actually make basically women's athletic clothing, a lot of like yoga pants to do yoga in, right? So it may not sound like a very attractive stock, but I think Lulu is actually quite an interesting trade. Let me make a note here. Because the stock tends to have plenty of price action, and what I like about Lulu right now, okay, and this is generally something nice to look for good trades, it's got a very tight pattern. You can see we have very well-defined support somewhere around $64, and very well-defined resistance somewhere around 67.50 or something, whatever that is up here. Let's look at that more closely. Yeah, so here about $64 support and about 60. Let's call it 67.50 as resistance. So this is certainly a stock that I would keep a close eye on as we head into next week. Again, it's not doing anything right now, but it does have these tendencies to move rather quickly once it breaks out of these ranges. You can see the ranges all over. We had one here. We had a smaller one here. Right, so once it breaks out of these ranges, and you can draw them all over the place, really, it does tend to move rather quickly. So that's a good one. And I guess one very last one to look at is biotechnology stocks. So we look at the IBB, which is our biotechnology exchange traded fund, and we look at it on the weekly chart first. So let's have a look at where we are. We are hugging that red line, which is the 200-week moving average. Okay, and that 200-week moving average kind of looks like, you know, is well, it's been broken a couple times, but we're still in this box, right? So that's why I always say multiple things have to come together for a position to start working or not working in that sense. So what was I going to say? Yeah, so that's kind of what we're looking at here. We're kind of stuck in a range. We're trying to break out. So biotechnology, I get a lot of questions on biotechnology stocks every day, and that's kind of what we're looking at here. Is a potential breakout, but it has not yet happened. So if we look at it on the daily chart, maybe quickly one more time, you can see we are very much at the upper end here, but not yet quite able to break out. So I don't think there's much to do in biotech. We did have a buy signal down here on this particular day in, I guess it was early February, and then we rallied to the upper end of the range, but ever since then there hasn't been a whole lot going on. So anyway, guys, I gotta go, but I hope this was helpful for you guys today. I wish you all a wonderful weekend. Take this for what it was worth, and you know, I believe next week is going to be interesting enough again. We'll see what the weekend brings. Take care, and I'll talk to you next Wednesday for our last webinar in this webinar series. Take care.